Good morning and good afternoon, everyone, depending on where you are. We're just going to give it just a second here for everyone to load in and we'll get started.
Or good evening. We have some folks from Dubai joining us as well.
That's true. Thank you, David.
Of course. At 2 a.m, the front desk doesn't know to say good night or good morning to me. So.
All right. Well, welcome everyone. We're going to go ahead and get started. My name is Alyssa Berry, and I'm proud to be joined today by Billy, Mike, David, and Brian. Web3 Ventures is a compliant pre-public investment company incubated to provide a diversified investment exposure to the burgeoning Web3 industry. Recently closed seed investment led by orthogonal thinker. The team will focus today on identifying passive and control investments in Web3 blockchain, AI, VR, AR, and gamification to build scalable, verifiable revenue growth. We see an unprecedented opportunity has emerged to provide access to investments into tier 1 assets and build an ecosystem for the future of Web3 while providing much needed audited transparency for shareholders. Billy Huang is the co-founder of Insomnia Labs, an enterprise-focused Web3 consulting and solutions firm. He has extensive experience helping brands like L'Oreal, Under Armour, and Coca-Cola navigate the exciting world of decentralized technology. With a background in tech and advisory, he brings a unique perspective to the table and is always looking for new and innovative ways to bring Web3 into the mainstream. Mike Grantis is the co-founder and managing director at Contango Digital Assets, a Web3 venture capital firm focused on accelerating the adoption of decentralized systems. Mike has advised and invested in more than 50 Web3 projects, bringing capital introductions, strategic connections, and go-to-market planning and launch strategy to his portfolio of companies. Prior to Contango, Mike founded Web3 media outlet Crypto Weekly and the best-selling course Bitcoin 101. David Nixad is the CEO and co-founder of Web3 Ventures with a lifelong career as an entrepreneur and investor across various industries. David shares his knowledge and experience with his portfolio companies, assisting them in growth and value creation. Brian Keane is co-founder and director of Web3 Ventures with decades of experience as in M&A on Wall Street. Brian concentrates on identifying acquisition targets for Web3 Ventures. He brings over 23 years of capital markets experience and investing experience to the team and has participated in over 100 investments totaling over $2.5 billion across every major industry. Before we get started, I'd like to remind everyone that certain statements made during today's presentation may contain forward-looking information within the meaning of applicable securities laws. Such statements may include estimates, projections, goals, forecasts, or assumptions which are based on current expectations and are not representative of historical facts or information. We want to be clear that such forward-looking statements represent the company's beliefs about future events, plans, or objectives which are inherently uncertain and are subject to numerous risks and uncertainties that may cause their actual results or performance to differ materially from such statements. With that mouthful, I will turn it over to Brian Keane to kick it off.
Alyssa, thank you so much. Really appreciate you hosting us today. And I have to give you a plug. One of the best, if not the best, IR professionals I've dealt with in my 20+ year career on Wall Street and actually Bay Street. Specializing in the Canadian capital markets since 2004. Definitely really a pleasure to work with you. And all I have to say is what a team do we have here on the panel today. Super excited about what we're about to get into, which is, it reminds me when I was in law school back in the late 90s and everyone was leaving our classroom to get on the computer in the library to trade stocks in this internet boom. And I was like, what are these guys doing? These stocks are moving by 10, 20 points. And, I feel like I'm right back in that era, with Web3. It's such an interesting, disruptive time in our lives. And I'd love to kick it off by just having everyone on the panel say a couple words about themselves. Alyssa did a fantastic job, introducing everybody, but I would love for everyone just to, maybe you could just jump in, starting with Billy, talk a little bit about your history and what brought you to this space. And then, obviously, what is Web3 to you? And this market that we're in is certainly such a dynamic time in terms of, what's going to be the future of not only the web, but also how we conduct business, how we live our lives, and how we, really help and support. One thing that's always top of mind is the community that we're in and how it's changing. So Billy, welcome, love for you. And then we'll go around table. And I think, we'll chime in on certain ideas and topics that we want to focus on from our newest entity called Web3 Ventures. Go ahead, Billy.
Thank you, Brian. And it's great to meet you all. Obviously, all the panelists, I've met you from a long time ago. I'm Billy. I'm the CEO and co-founder of Insomnia Labs. As we kind of said before, my biggest clients I'm working with today are, L'Oreal, Coca-Cola, Under Armour, Unilever, helping them transition into Web3 in a way that's, scalable, strategic, and, can gain mass adoption, right? So, here at Web3 Ventures, I help a lot with, I think, strategic partnerships, diligence, like helping, kind of source and, figure out, what deals are actually good, what is, fugazi. And yeah, I mean, I'm excited about Web3, a lot about kind of the value creation side of things. I think, when you think about the way that an enterprise traditionally works with, mainstream consumers, it's very kind of top down, right? But now it's all about community building and co-value creation, with your consumers. And, when you think about the products that they're coming out with today, a lot of it has to have, element of co-creation with the consumer. And so a lot of, I think from what we're seeing, especially from the enterprise side is, how that co-value creation is supposed to be a win-win for everybody, and that Web3 is the vehicle, for us to get there. And so we're excited to meet you all, and then, happy to be here.
Awesome, Billy. Really appreciate that. And Mike, I'm sure he'll mention, but he is actually a portfolio company of our new entity and pre-public issuer called Contango Digital. We partnered up early on. We actually met probably about 7-8 months ago in West Palm Beach at a major conference exploring the space, and we were super impressed from day one. It took a while of, let's call it, dating to get to know each other, but we were blown away about not only Mike and his partners, but Contango Digital. Mike also serves on the board of directors for Web3. And so we're really looking to both Billy as an advisor and also, of course, Mike as a board member to, advise us, let's call it the youth in the room, picking up everything for David and I. So Mike, why don't you just give a little stint on you and Contango and what your take on Web3 is?
Yeah, awesome. Thanks, Brian. Yeah, so, personally, my name's Mike Grantis. I got into the crypto space in 2016, actually found Bitcoin through a digital marketing company that I was running at the time for payments, and very quickly fell down the rabbit hole like many of us that really research the crypto ecosystem do. First and foremost, Contango is a venture capital firm. We invest in early stage Web3 projects, pretty much spanning the industry, but we have a few focus areas, infrastructure being one of them. So think about that like kind of the base layer pipes and rails that this new Web3 ecosystem runs on. So we're investing at the earliest stage and at the earliest level in those kind of infrastructure plays. Also in consumer applications. So we know, the internet had their kind of email moment that spurred mass adoption. Those moments will come as well in Web3. We've gotten to a point in kind of the industry where that is inevitable, and the kind of evolution of the internet will lead us to Web3. So we're excited to be kind of in at the ground level in those, in those types of deals. As Brian mentioned, we met in Palm Beach, but I think one thing that both myself and my co-founder Josh have done, very well in the industry is we've kind of taken this Web3 approach where your network is your net worth. And so that is very important in Web3, the network effect. And so we've been going to as many conferences as we can, trying to shake as many hands, meet as many, people in the space, interesting founders in the space, builders, thought leaders, and really building up kind of a strategic arsenal of connections, be that with centralized exchanges to help our portfolio companies with listings, marketing partners, KOLs, et cetera. And so we're trying to swim upstream and get as early as possible in the value creation process, getting some great deal flow from VC partners in the space, and sharing all of that deal flow with our good friends at Web3 Ventures. So really excited for the conversation. Thank you guys for having me, and really excited to be part of the organization.
Awesome, Mike. Really appreciate that candor, and we look forward to I think this space, and obviously our company is surrounded by great community, developing that community, and really investing each other as human beings on how this whole space will evolve. And to that point, I would say that sometimes you say save the best for last. We have David Nixad, co-founder of Web3 Ventures. I also want to give a shout out to our other co-founder, Jason, who is up in Canada, for all those Canadians on the line, which, we are going to be a Canadian publicly traded company. And so, he's up there right now meeting with investors and certain partners. So shout out to him as well. But let me turn it over to, the founder of Orthogonal, and, why we're all here today is David Nixad, CEO of Web3 Ventures. David?
Brian, thank you very much. Thank you, Alyssa, Mike, Billy. I know everybody's super busy in this day and age. Number one, I'd like to thank our 10,000 plus investors that all have exposure to Web3 Ventures through EI subsidiary Pluto 1111, as well as Orthogonal Thinker, who are both shareholders into this company. Many people that know me love the word co-creation, love, your network is your net worth. But I also like to go back to auditability and community building, which were the two words that came to mind in my meditation this morning. I did see the Satoshi the Satoshi white paper early, or the Bitcoin white paper early. I was very impressed by it. I thought that the world needed it coming out of the 2008 crash. Just to be candid, a little bit nervous today. I'm super excited about Web3 Ventures, almost like a kid getting a new toy. This will be my first public company as a CEO. And takes me back to 2008 when I had first heard on Halloween about this. And at the same time, we were looking at a company called Betterment, which was a company that was getting into banking and robo-advisory in a very, very similar time as we are right now. So again, there's a deja vu here to understand that there are going to be cycles, and there are going to be times where things take time to grow and level up. And I think given that the banking sector in general and the crypto market is ever changing with different blockchains and DEXs and other things, it's to remember that Web3 is a community building product. It's an auditability product, as well as a place where people can get liquidity and exposure to tier one investments in this space, and not have to worry about not having audits and other accountability. This is why I am so excited about Web3 Ventures. I think to finish that off, I can remember being at YC on 2 occasions, and I need to check this out, but I think it was the same YC batch, but I remember seeing Coinbase and WeFunder at demo day and understanding that in a way they were sort of the seeds that planted what Web3 Ventures is today. When you look at WeFunder, it was the first company that was going after crowdfunding and SPVs. And Coinbase was really the first company to allow, I would say, exposure to Bitcoin at a very seamless level. I remember them installing the button and all of a sudden it took off. So hopefully my different deja vus and tangents meant something here.
Yeah, no doubt, Dave. It's definitely a journey to go on. And I think it's, you know, a lot of this is about timing. And so let me just open it up to the panel here about what's going on with this market. You know, the traditional, or as many of the folks that may be listening in are, you know, termed TradFi or traditional finance. We're going into this whole decentralized or DeFi. We're already in it actually, but there's a real movement for digitalization. And David, you and I always talk about, you know, where is the greenback in the US dollar? There almost is like a war versus what the traditional money and banking system is or was. And, you know, with all these various failures, how does Web3 and sort of the mantras of Web3 fit into what I would call one of the most interesting but crazy markets, and maybe even manufactured markets that we've seen in our lifetimes being, you know, in this space? What are your thoughts, Dave, on where we're headed in terms of Web3, you know, Fed now, digitalization versus the traditional banking system, and embracing what we're all getting into and why we're here today speaking about this whole evolution?
I was on a Spaces with Anthony Pompliano last week, and he told me that I forgot the word that he used, but when I was chatting him about Fed now and, you know, the idea of moving fiat and Bitcoin and other digital assets to a, you know, essentially a digital dollar controlled by the government. Listen, I've done business all over the world. We've known for a long time that many currencies are manipulated. Again, these are opinions of my own, nobody else's. I used to do business in China for a very long time. And, you know, what we're in a different place right now. I was explaining this to my kids over the weekend. In the next 10 years, politically, and the people that are running the different countries of the world, they're not going to be here. Many of them are not going to be here. I think we got to remember that there's an evolution to everything, and I think that things take time. But what I do realize when I look at actual metrics, specifically in the US, if you look at the US today, more than 30% of people don't believe in religion. More than 90% of people think that our government is corrupted in some sense. So I think when I go back to the Bitcoin white paper and what Satoshi was trying to come up with was something that nobody could come in and tinker with on a subjective level. And I think what Web3 has allowed us to do, let's be candid with you, Twitter is the epitome of Web3. It's the idea of bringing community together, an ecosystem working together, and having truly free speech and people getting information that is non-manipulated. And again, everybody can have their versions and opinions of the president of the United States or Elon Musk or whoever else. But at the end of the day, we are all looking for a world of abundance for all of us. And I only want to do business with people that are looking to have an ecosystem of people that want the best for other people. And that really is what Web3 Ventures is to me.
No, it's fantastic. Mike or Billy, you have any comments on sort of the state of the market and this whole disruption? You know, what comes to mind is we've been talking to a lot of investors that are looking at our investment vehicle as well as, deals that they're investing in. And it's how do we get away from this whole debacle at FTX? Not to bring it up, but the fact remains is that what we're trying to do here as a first mover entity in this space is to obviously that's my opinion because we're very unique. Is how do we and get away from this these bank failures, making sure that we have audited financials and transparency, proper boards, audit committees, and all these other things. Is there more bank failures coming? Do we see a shift? A lot of people are talking about a shift out of the United States to offshore markets because they do and they are embracing this sector when everyone else is saying no, and they're bundling it together. But Billy, Mike, if you want to say some words about that, because we have a bunch of topics to cover today.
Mike, you want to take it first?
Sure.
I spoke first last time.
Yeah. So, I mean, I think the nice thing about the crypto industry is that it's global. And so regardless of what happens in the US, there will still be, bastions of hope in countries that look to adopt, Web3 standards. Just to touch on your point about market timing, I think what's nice is that Bitcoin and sort of the broader Web3 market are somewhat insulated from FedCoin or FedNow or the interventions of the federal government. Bitcoin's supply schedule is programmatic. Everybody knows what the supply is going to be from here into the next 100 years. Bitcoin runs on a halving schedule that halves every 4 years. Typically, bull runs in the past have happened, 6 to 12 months before the next halving. The next halving for Bitcoin is scheduled in March of 2024, and so we're kind of right in that prime time window where things, the market still hasn't realized it, but the next halving is coming. The opportunity is on the horizon. We have that that insulation and kind of building the parallel financial system of the future. And I would just add to David's point about community, right? Crypto is based wholeheartedly on community and network. Bitcoin and all other cryptocurrencies gain value as users adopt them and as their network grows, both in kind of users and transaction value and transaction frequency. So if you believed in 1990 that the internet was somewhat inevitable, I think the same sentiment applies nowadays in the Web3 market, where we have this kind of step change of technology. It's only a matter of time before that is adopted, and as that's adopted, there's a correlation with adoption and price. So I'll leave it there.
No, that's fantastic. Billy, you have a couple words on this?
Yeah, just really quickly, I think from what I'm seeing now, you would expect that enterprises in general would shy away given like the FTX or like Terra debacle, but we're actually seeing the exact opposite. It's almost like an arms race at this point to get to be the first one to figure it out, right? And I think that's what makes this timing very attractive and exciting, because you have all these companies, all these enterprises looking to explore and actually figure out real use case. The smoke and mirror is gone. And now it's all about who can actually deliver the value and the promise of Web3 now. And I think that's, for me, why I'm in here, right? Like working on this deal, why I do what I do with the enterprise side. I think it's very interesting now that, a lot of the markets have matured in a weird way, right? Like thinking about like, what caused all this like fiasco with FTX was the fact that, they didn't have Merkle proofs, right? They didn't have all these like auditability trails. They didn't deliver on the promise of Web3, which was to make everything transparent. But now people have learned from that mistake. And so you have all these mistakes and learnings that people are building off of now, which means that, going forward, we are expecting to see a lot more robust applications, both from, company, private placement side, as well as, in a public setting with mainstream consumers actually getting the value and the promise of Web3.
Yeah, I also, go ahead, Brian, I'm sorry.
No, just saying that's really, really good commentary on the subject, and kind of, I think a lot of people think that this is dead, but it's actually, we're seeing the opposite. And I think that's why we're so much in the right place at the right time in these volatile markets. Sorry, go ahead, Dave.
No, I think that I always like to touch on the point. I mean, I get a lot of questions from our investors regarding why this, what is the upside, what do I do in a consolidated market? When we incubated this vehicle called Web3 Ventures, which is an investment issuer, it was when Bitcoin was at the 16,000 mark. So I probably had 100 messages from people that I was talking to about it that said, are you crazy, David, to get into Web3 and NFTs? Bitcoin is going down to, whatever, 5,000. At the end of the day, Bitcoin has gone through multiple different, what I would call, consolidated structures. We also understood that the halving was going to happen in 2024. We knew at some point that Bitcoin was going to rebound. And I think that a lot of people have to understand, and this is not financial advice, is that we are going through, again, cyclical environments all the time, depending on where the emotional intelligences of the world. And as weird as that sounds, I still abide by I still go back to the idea of quantum physics and quantum chemistry and the idea of energy and everything that we produce. If you go back to what got me super interested in the holding company structure, was learning about Berkshire Hathaway when I was a teenager. All I wanted to do was own a share of Berkshire Hathaway. And it was an idea of owning a share in a company of many different things that I enjoyed. And at the time when I was a teenager, I did enjoy Coca-Cola and I did enjoy a C's candies. So I think today what you are looking at is, and again, I think Warren Buffett and Charlie Munger are incredible investors, but also there is an evolution in what a holding company structure looks like and the idea of investing in things and people that are looking out for humanity in the future. I think there is a balance. And again, I don't want to get off subject with what Web3 Ventures is, but there's a parity of community building and auditability, as well as investing in good people that are doing good things. And somebody asked me this morning, they said, it was a call that Brian and I were on about Sam Bankman-Fried. Again, we met him early on. There were opportunities to invest in FTX. And I think that at the end of the day, the people that didn't invest, there wasn't an energetic connection to what I would say the ego or what the intention was behind what they were doing. And I don't think we're a know-it-all, but I think that our track record and the investments that we've made today, we manage a portfolio of over 80 investments. We have had very few investments have problems. We did invest in Luna and Do Kwon, but at the end of the day, I did believe in what Do Kwon was doing, and it's not always going to be perfect. I would say that when I look at Billy and Mike, which we are both investors in their companies in different subsidiaries, we took the time to get to know them. We went through a checkbox process, and it wasn't all about money, money, money. It was the idea of a longitudinal investment where when you look at an investment issuer, it's based off of NAV. At the end of the day, the NAV is going to change over the years, and you want to invest in people that can go down what I would call this 10-year cycle. When you look at something like Berkshire, it's a 50-plus-year-old company. So I would say that when you look at the infancy of orthogonal thinker and where Jason and I, how we started this, it would be only natural to evolve into this investment issuer vehicle.
Yeah, absolutely. I think that's, very, very great points, because, investors and community, Web3 natives, and there's a lot of new nomenclature, and they're embracing the fact this is not the first time this happened. There's a company called Galaxy Digital that trades up in Canada on the TSX main board, who has probably about 700 investments in the space. There's room, and we're getting a lot of traction for what we're doing, because there's smaller and medium enterprises, there's seed and other different types of innovation. And based upon all of our experience on this panel, we have the know-how to check boxes and do due diligence and do all the things necessary to not only protect shareholders but incoming investors. So to shift a little bit, and one thing, 3 little letters that Dave mentioned was this whole thing about NFTs. And I know that in talking to general people and, family and friends, and they say, oh yeah, NFTs, they're art, oh yeah, it's the Bored Ape Yacht Club, and, oh, it's a scam. And I would point this to our formidable NFT expert on the panel, which is Billy Wang. Why don't you talk to the audience a little about what you see in sort of this, I think a lot what we're doing here too in our venture arm is in Web3 Ventures is educating. Mike mentioned he had this Bitcoin 101 course that I think about 13,000 people paid just to learn about Bitcoin back in the day, and still to this day. Talk to us a little bit, Billy, about what your experience is on what is really an NFT. It has to have utility, but it's also something that the major corporations in this world, like Coca-Cola and L'Oreal, are thirsty for. They want to have this, and you've had some of the best launches with them. Why don't you talk a little bit about that, because we're super interested to find out.
Yeah, absolutely. I think just to step back a little bit, the idea of an NFT is really just like, a title, right? Like, or a deed that is then recorded on the blockchain. So, when people talk about art, it could be art, but it can also be a digital product. It could also be a lease, right? It is just a record of ownership of something that you have. And the moment you start looking at it like that, it is much easier to see that an NFT is essentially just infrastructure, and it's not something that is meant for people, especially if we're talking about mainstream consumers, they don't necessarily need to know, right, that it's an NFT. And you see that a lot with, like the Reddit collection, right, with like the avatar pics that they've come out with. You see that with Starbucks Odyssey, right? You see that with Nike.swoosh. You see that with all of these like enterprise offerings that essentially have just abstracted away the level of blockchain for the user. And I think that's really where you have to be in order to kind of gain that mass adoption. So a lot of times when I talk to enterprise, it's a kind of crawl, walk, run cycle, right? Where you need to figure out what it is that you can use the blockchain to actually deliver value, and then figure out how you're going to onboard the first market, North America, South America, Asia, depending on where you are, and then figure out, okay, what is my global strategy, right? And you can't really do all those things at once, because it is a learning process, and it is, a new technology that, you have to get organizational buy-in to create. And I think that's what's really exciting about the space. In terms of like the usage of it, I think a lot of what we're seeing now is like loyalty programs, right? So like, if you're trying to build Amex today, you would probably want to use blockchain to do it, right? Because it is much easier to plug into. It is extremely auditable. You can have all these partners like on board all at once with like very small overhead, right? There are actual operational efficiencies to exploit that is valuable, right? To both the user who can see all their transactions, as well as the enterprise who can have all their business units, all their business functions be able to tap into one place. And so I think you're starting to see that. And when I advise different companies, and when I build these loyalty programs for these companies, you're trying to actually exploit the efficiencies of the blockchain instead of trying to use it kind of as like a gimmick or like a PR stunt, right? You really want to dive into what is the actual value, transparency, trust, interoperability, using all those pieces to your advantage when you're building out these products. So when we talk about NFTs, I think and I think Mike probably has a better purview, it's also about the tokens, right? It's not just the NFTs, right? It's about the tokenization of these digital assets. It's also about how the user onboarding experience is supposed to be like. What is your omni-channel presence? All these different things that you have to take into account. So, long story short, I think there's a lot of room for the idea of an NFT to grow, but I think it's going to become more and more in the background as it's being used to actually flesh out utility for the user, instead of, kind of like a social class asset that has been used like Bored Ape in the past. And I think we're shifting away from that.
Well, can I ask you a question, Billy? I mean, at the end of the day, and we've had this discussion, when you look at a Bored Ape Yacht Club and you look at some of the utilities in the community building, I would say that when I speak to somebody, when somebody comes to me and says, hey, I'm YPO, or I have a black card American Express, I mean, essentially Bored Ape Yacht Club is a community of specific people, like a lot of celebrities, a lot of high net worth people are in this community. I do think Yuga Labs did a very good job doing that. And if you look at it today, there have been utilities like Happy Dad, Nelk Boys created their jerky off of it. They created a Happy Dad seltzer. So again, there are community building exercise through those NFTs based on artwork as well.
Absolutely.
Absolutely. So I just want to be able to be conscious of time because we want to open it up to our audience for Q&A, and if we don't get too many questions, that's fine too. We can continue our discussion. We have about 5 to 7 minutes left. So I wanted to just throw up another topic, because if I hear Chat GPT one more time, I think will explode, but which is fine. We see it on CNBC. And again, with the community sort of theme, and what we're trying to do at Web3 Ventures is understanding how to really understand what this new age world will look like without, human capital. This whole AI movement, and AI has been around for probably a couple decades, to be honest. I don't know if that's exactly right, but it's been around for a while. I got into it probably about 3 or 4 years ago. I just thought it was another shiny object. But boy, can we see that this is disrupting the way people live their lives, elimination of jobs. We just saw a major strike in Hollywood for writers. Let me throw it to Mike. We're looking at some interesting AI technologies right now. And part of what we're going to be doing at the, at Web3 Ventures is understanding and looking at all of these disruptive, type investments and asset classes in AI. But it's not just ChatGPT. It's this generative piece. And Mike, maybe we want to talk a little bit about sort of what you're seeing in the AI space, because, this is something that's going to be part of our portfolio.
Yeah, I mean, it's nothing short of true to say that, AI is probably one of the biggest breakthroughs of definitely the decade, of probably the century, especially as it continues to grow, exponentially in both knowledge and kind of user adoption. But I also think, AI plus blockchain is kind of a match made in heaven. There's a lot of value that can come from both AIs having a transparent, auditable record of proof and history of what's actually happened, and also a lot of kind of computational benefits that blockchains can provide to AIs. As it relates to ChatGPT, obviously that was the first big shiny object that was made for kind of retail consumption. And I think what it did was just change the paradigm for the general population to say that it's not coming, a decade from now, it's here. It's here right now, it's being built, and, it's already productized. Now, where I think there are some downfalls of ChatGPT and, GPT-4 is kind of in its ability to understand itself, to reason and to understand if it's correct or incorrect, and also its ability to have memory and learn. Now, there are other large language models that are coming out with that functionality, is specifically kind of in neurosymbolic feedback and neurosymbolic reasoning, that I think when it comes to creating a artificial general intelligence and not just a narrow artificial intelligence, what I would classify ChatGPT as is something that's incredibly good at synthesizing all the information on the internet and giving you kind of a succinct answer. But what it doesn't necessarily understand is if that answer is correct or reasonable. Whereas if you can create the large language models in a way that understands the relationship between objects, the relationship between different things, and can also have memory and begin to learn and recursively iterate on itself, you have the ability to create a general intelligence. And some of the companies that we're looking at right now in Web3 Ventures and at Contango are doing exactly that, and actually have about a decade's head start on building this from those at OpenAI and Google DeepMind.
Yep.
Fascinating. Anyone else have a quick comment? I know we're rounding up here, Alyssa, in about 2 minutes to open up for Q&A, but any comments on AI, David, Billy, either of you?
I think all of this goes back to Web3 Ventures as a accessible way for people to get involved with an organization that has exposure to all these things. I was lucky enough to be involved with YC very early on in the 2009 era for a long time. Obviously, I met Sam at YC, and I've seen different people go through that iteration that were involved with ChatGPT. I think that the tough part about it is so many of these deals, and I hate to use this language, but there's such a good old boys club. And if you really look at, the cap table of ChatGPT, which I have a lot of admiration for both Sam and Elon, it's the same people that are on all the big cap tables. So I do think that a lot of times when I talk to our own investors, there's a segmentation of understanding, like, how do we get exposure to those deals? And I think that for myself as an investor, I think I made my first investment when I was 19. Today I am 46. This is a vehicle that I would invest in. I have invested in because it brings the best of everything that I've worked on in my life, understanding that even where I'm at, and I have deal exposure to great deals, I'm not privy to get into a ChatGPT. And then when you look at the secondary markets and other things, even when you participate at that level, and I've been doing SPVs for a good decade, all the real good liquidity is already taken out. So I think people need to understand is there is so much wisdom and parity and what I would say in Hawaii, Pono, which we call righteousness, into what Web3 Ventures has been built into.
Absolutely. Definitely, I would say things I've heard are it's the age of communities. We saw what happened during the pandemic with, these, the retail really moving the markets. I think, Web3 is all about, own to consume what you own, having individuality and this whole shift is what this is all about in terms of seeing what's going to be happening in the next 3, 5, and next decade, and what the future generations, the younger people that we interact with on a daily basis, because that community is filled with the brightest minds, and we have them here with us today. So just wanted to turn over to Alyssa. And, I think we have a pretty good audience here from what we can tell. And they probably do have some questions about not only the panelists, but maybe Web3 Ventures or just the space in general. So I'll kick it over to Alyssa.
Thanks, Brian, and excellent job, everybody. That was excellent. We do have a number of questions that have come in, and I'm just looking at them on my screen here. Brian, probably the first one for you to tackle here. Timeline for the listing of Web3 Ventures going public in Canada. Why did we choose Canada to list? And given the uncertain market conditions, why do we think now is the right time? So do you want to hop in on that one?
Yeah, sure. I would just say that obviously comparative to the US and been operating in Canada, we are in sort of a quiet period. So I would just say that we are very close. We have filed our listing statement. You can go to our website, w3ven.com, to get our PowerPoint presentation. There's readily available information there as well. But we are on timeline in terms of trading. Why Canada? It's a lot of the things we talked about. We do have, when we look at deals, we always ask for not necessarily competition, but what your comparables are. And when we look at what Mike Novogratz had built with Galaxy Digital, and we also looked at the broader scope of other foreign issuers and private companies like an Animoca Brands, David's vision and what we all discussed was, how do you take the best of both of those entities and allow for an entry point, not at multiple hundred millions of dollars, but this round that we're out on that we announced recently is coming out at a relatively, very bite-sized valuation of about 15 million. So whereas, in our world, pointing our filing and go public to Canada allows for many of the other industries that Canada has been known for, like cannabis adoption, legalization, psychedelic, first mover advantage. The Canadian markets are very, very welcome to innovation and entrepreneurship. And this structure versus the structures that we have in the US give us this opportunity to have this holding company investment like fund structure to be publicly traded, which is great. So those are the reasons why we headed this route, and we're really scaling something to make it to a multiple shot on goal, but multiple investments, diversified. And you have the best people. If you look at our broader advisory board and board, we have the best minds that have been doing this on their day-to-day for their entire careers. So,
thanks, Brian. And there's a few follow-on questions to that as you're speaking. Someone is asking if they can invest prior to the company going public, and also, can you clarify if this is for accredited or non-accredited investors?
Yeah, so I would say that anyone that wants to inquire about the company, feel free to email us at brian@w3ven.com, or I believe, Alyssa, you're handling the info and investors at w3ven.com. But yeah, we are in the middle of an announced raise. So again, that's not the purpose of this webinar. It's educating about what we're doing and creating awareness around the space. But we are soon to be going to be publicly traded. Please visit our site or reach out to us after we redistribute this recording so we can talk to you. We do have to go through a process. We are obviously, I have a very early legal background. We're surrounded by lawyers and we have great counsel. So we just want to do everything. We always say when we're on investor calls, we measure 10 times and cut once. So please do reach out to us.
Absolutely.
Thanks, Brian. There's a question that's come in from someone saying, when looking at any investments, I look at what the roadmap is for bringing value to the asset by developing utility for business and consumers. Where do you see the biggest areas of focus for such a roadmap for Web3?
Dave, you want to take that one?
Sure. I mean, what you need when you're making an investment of any type, you need to look at what is on the horizon, what are people working on out there. Obviously, Microsoft is putting a lot of chips on the table with AI. We're very clear that Apple is moving down this road with AR, VR. If you look at our backgrounds in terms of whether it's working on products that involve the FDA or clinical trials or blockchain and Bitcoin or banking and fintech or space, sometimes we are involved with a lot of different companies in 80 different holdings. And for me, what I would say is we took the wisdom that I feel like I've learned from people like Naval Ravikant, Anthony Pompliano, Mike Novogratz, Paul Graham, Jessica Livingston, Steve Jobs, Elon Musk. I could tell you spent 3 years looking at this, spoke with people at NASDAQ, spoke with people at NYSE, the private market issuers, the SPVs. And I would tell you that, and I'm going to give this off to Mike Novogratz, when I looked at the structure and I looked at all the companies that Mike Novogratz had exposure to in Galaxy Digital, I was super impressed, because a lot of times, and I'm going to say this to a lot of people, more than 80% of the time when you invest in private companies, it's very, very difficult to have auditability. And for me, as somebody that is, been involved with the likes of, Republic Capital, WeFunder, Y Combinator, that auditability and being able to know what net asset value is in real time and to be audited on a quarter by quarter basis was so important for me. And I wanted to make sure that, as EI is a private company and so is Orthogonal, that they both had exposure, because both are going to be involved with the ecosystem at a very high level.
Yeah, no, that's great, Dave. And I would just add to that, Alyssa, in terms of coming from sort of a journeyman in the traditional finance space, which is, I was a market maker on the NASDAQ. I went to, and again, this is not a selfish plug, but it's, giving you a context of why this structure, I think, means something different in this new age of Web3. We had I had started and helped build a fund back in 2001, and it was your traditional 2 and 20 model. You wrote a check into a company, and it was kind of like, not hope and pray, but we did enough due diligence, we did enough structuring. Many of those companies failed. What's great about Web3 Ventures, and pointing to your question, is one thing we're providing in Web3 Ventures is liquidity to our shareholders, but also it's passing that liquidity on to some of the folks on our panel here. Is what are they going to do about Insomnia or Contango Digital or Rocket Wellness or Dynasty Studios? All of these investments that we have at Web3, is what is their next move? And a lot of times when you're in the traditional, I think, fund model or investing model, you put out a check and you just kind of say to yourself, okay, waiting to see where, or let's get an update 3 months later. You also have the venture capital model, right? And a lot of people term that as vulture capital. We're taking a different approach at Web3, where we're going to be value-added capital. And value-added means to us, and it means something different to everyone in our organization, but it's understanding, protecting our investment, our shareholders, but also understanding where is, let's say, like, for example, Rocket Wellness going to be in 6 to 12 months. Where are they when they execute, because we're investing in the managers as well as the assets, where are they going to be in 6 to 12 months, and how do they get their own liquidity profile? So it's a situation where we envision, again, this is a forward-looking statement, but as we build our portfolio, we're going to see them doing their own monetization and liquidity pathway, whether it be go public, a sale of their business. And we want to pass that on to the shareholders of Web3. So that's really the longitudinal sort of process of what we're looking at. And we're super excited about it, because right now in these consolidated markets, it's the best time to buy. You make money when you buy. I learned that from Dave Nixat.
Thank you, Brian.
No doubt.
Just a reminder, if you have a question, please submit it through the Q&A chat at the bottom of your screen. There's a question here about the portfolio investments today of Web3 Ventures. Can you touch on the makeup of the portfolio, Brian?
Sure. I will actually turn to my, I guess, left or right here and lead with Mike at Contango Digital. So maybe walk through a little bit of the process, because there's such a synergistic play with Mike and his firm in that this is about how Web3 Ventures gets access to our daily deal flow, but also partnering. And this is where this whole sort of age of communities is concerned. How do we actually get into a partnership with a guy like Mike in Contango Digital, who has probably done about 70 investments, various SPVs, And, you know, what we also know, Dave and myself, is we can't do it all, right? So it's going to take partnerships and trusted young minds like Mike. And so we were able to, like Dave said, we spent a lot of time with Mike. We got to know him personally. We got to know, and he's proven himself. He's been very, very active lately. And I think when we're on the other side of the go public, we're going to be looking at significant, interesting, you know, first looked investments. So that's one asset on the, you know, so the balance sheet right now that we're heading into listing with. We also have a, go ahead, Dave, you want to chime in?
Yeah, I think the big thing is really going back to the model of how we built this. It's a very, very Y Combinator model. So if you go back to Y Combinator in the Airbnb and Dropbox days, it was basically, I think, $6,000 per founder. Sometimes there were 3 founders. It was 18,000 in. They would get 6% of the company. Obviously, now it's different. They write you a check for 150,000. And they get 6%, and then they have their fund that I think they put another 500,000 in afterwards. What we did is we took the best of the best models out there and we said, okay, how do we get involved with teams that understand the full life cycle of raising money all the way to either a go public or a liquidity event, and then also having the most amount of equity that we could in a deal. Something like on Contango Digital, we own 5% of what I would consider the GP, which is the top level structure. With Rocket VR, we own 25% of the company. I would love for Mike to explain, because I know it's not simple with me. I am firm but fair. But how was negotiating this deal with us, Mike? I mean, what happened?
Well, I mean, it definitely, we definitely had our dating process over the you know, first few months. As I mentioned, met Brian in Palm Beach for the first time. We started kind of an online relationship with kind of yourself, David, and Jason. You know, and you guys, you asked a lot of questions, some good questions. You guys were very interested in kind of where our path to liquidity was, where our kind of profitability came from, how the business was structured. And, you know, over time, we came to an agreement, partially because we saw the value of what you guys could bring on the back end. And I think, you know, as we know in investing, all capital is not equal. We want to make sure that we're aligning ourselves with partners that share the same views as us, and you know, that we could see ourselves learning from, and, you know, kind of being a sponge from the experience that you guys have had in the industry, and using that to kind of propel ourselves to the next level. So we were able to cut you guys a deal that was a little bit more favorable than you know, some of the other investors on our cap table. All, you know, disclosures have been made. But that being said, I think there's incredible value add that you guys can bring in terms of getting us that path to liquidity. You guys have already kind of shown us the playbook on the investment company issuer and kind of the strides that you guys have taken towards, you know, bringing this kind of liquid investment to the public markets. But I think the same model could work extremely well for Contango down the road, or whatever the relationship grows into in the future. We're going to be all ears, and, you know, we love having guys that have, you know, decades of experience on the cap table like yourselves.
And I would add to this, and again, it's a subjective comment, but I advise a lot of companies. I don't take VIGs. That's not my style. I don't take, you know, shares and stuff as an advisor. I advise people because I'm an investor in their companies, and I can tell you that I am currently giving advice to 100 million to over $1 billion companies today on this investment issuer vehicle because of all the bells and whistles it has and what it allows you to do. I think also, just to be very candid, because a lot of people look at crypto and they talk about a lot of the offshore stuff that goes on. We purposely did this in Canada because of the investment issuer, and we have a subsidiary in the US. So it's very important for us especially with things like tax evasion and money laundering, that auditability is number 1, 2, 3. And if you know my co-founder, Jason, who is a securities tax lawyer, the letter of the law is 1, 2, 3 at all times.
All right, well, that brings us right to the hour. I'm gonna pass it back to Brian just for final closing comments.
Yeah, I would say that time flies, right? We're in this age where every day I think something new is happening, and just like this webinar, we probably could have spent a good another hour talking about the space, because we are obviously so passionate about it. But just first by saying thank you to everybody. First, thank to Alyssa and your team in IR Labs. Phenomenal job. Billy, I know you are like neck high deep in a bunch of projects with major companies. So for taking an hour out of your day or a little bit more with the prep, fantastic, great insight. Mike, I will tell you that we see a very, very longitudinal relationship with you. I want to mention to everyone in the audience, we will, most of us here on this panel will be at Bitcoin Conference Week. Starting on the 18th. We are holding an event on the 19th. So anyone out there that wants to come and meet us and talk about, Web3 or Web3 ventures, please do message either Alyssa or myself. And then I'll pass it off, and maybe Dave wants to end with some interesting commentary, to wrap everything up. But just want to thank Dave for, leadership, and, we wouldn't be here today without him and Jason providing, their community and, sort of the deal flow that spawned this Web3 Ventures deal. So just wanted to thank him as well. So Dave, anything to, wrap us and send us off for the rest of the day?
Yeah, I mean, I think number 1, 2, 3, I'm going to say I'm so grateful for the 10,000 plus investors. I think 11,000 that have been on this journey with us for quite some time. I would say that, Orthogonal Thinker was incorporated in December 2016. Time has flown. I am grateful for everybody being patient while I've made a lot of detours and U-turns and grand ideas that I've had, not always able to explain my big vision in my crazy mind, but very grateful. And, always relating back to my 2 children. I think when people ask me who do I go to or who are my teachers, I always look to my 2 kids who were raised in Hawaii and understand the innocence of first attention and what I want this world to look like in the future. Yesterday, I had the privilege of surfing with a group of people from Access Surf, which is a organization in Hawaii that allows people that have disabilities, people that have lost their legs and arms and other things. I think at the end of the day, somebody said to me from there that I was surfing with, don't feel sorry for me, feel grateful. Feel grateful for the small things in the world. And, I just would say I'm very grateful to be here right now. It's been a long journey. And thank you.
Yes, thank you, everybody. Alyssa, thank you. And that's the mission that we're on, is to disrupt and scale and, back the community that backs us. So thanks again, everybody.
Absolutely. Aloha, everyone. Bye-bye.
Thank you, everyone.
Thank you.